How's it going? We have a lot of information on this channel, and there is going to be some people asking for more. We have not only Brandon saying if you hit 35,000 subs, we will need to buy $4,000 in GME. I'm already adding $1,000 on top of that, so thank you, Brandon, for the promise. And Mr. DW asking, hello, sir. Not looking for financial advice, just entertainment advice. Of course, there is no financial advice at all on this channel. Can you please entertain me with a very good call option for GME expiring next Friday, a very safe call? And that is going to lead me directly to the Webull app, where we are going to do a full technical analysis of GME, traversing where it is, giving you guys a sense of exactly what kind of specific metrics we are going to look at, as well as giving you guys a sense of what I would assume is going to be a pretty safe call option. If you guys are not aware about call options, they're kind of like long positions, although they are just a option, not a promise, to buy a long position in the future. For example, let's say that the price of GameStop is $140, which it is. If you buy a call option at 200 or 800, for example, then you are saying that eventually one day GameStop is going to be more than that price, and hopefully when I can exercise my option to buy it at whatever price I promised to buy it at, that is going to be good for me, Tendy Town galore. The reason why call options is an entirely new type of mechanic in the economics of GameStop, AMC, and any other options industry is because when someone sells you this call option, they are likely not going to buy the share yet. This is called a naked option. This is something that basically they say, we'll just buy it later when it gets closer to the price, because of course, you know, the stock price goes linearly back and forth. So there is a chance for the person that sold you the option, the market maker, to then buy the stock when it gets closer. This is called hedging. If they do want to buy the stock before it reaches the price that you promised, or promised to have the option to buy at, that is called getting closer to the strike price. As we are nearing the strike price, GameStop is going to be able to start getting some price action upward because of the delta hedging that these hedge funds have to undergo. So without further ado, let us go into this GameStop technical analysis. As you can see on the board, we have some AMC on the left, some GameStop on the right. And when we look at GameStop, we are seeing levels of technical resistance and support. These are these teal lines that I have drawn in the past. We're also looking at this yellow line. This is the VWAP. We are looking at terms of how much volume there is and how it affects the charts overall. And then finally at the bottom, we are looking at the RSI, the relative strength index. That's something I love to be able to see and use as a sign of whether or not they had bullish or bearish momentum. So it's something that we want to be able to consider. A couple of days ago, GameStop was all the way down at $40 and change. This was all the way back in the times where we were tracking GameStop's small minor levels of resistance and support for a couple of weeks. And when it was able to start rocketing off on the 24th, it had a breakout price of $48, and in after hours reached a crazy height of, the crazy height that it reached, let me turn off auto, is $200. That is an obvious mental, psychological barrier, because people are getting scared, even in after hours where volatility can end up being higher. There is a lot of people scared that GameStop is not worth $200. If you guys have been following the channel, you know that technical resistance and support is just a way to tell us the population of people trading the stock is likely going to have to make similar choices day after day of whether or not the stock is worth more or less than the price that they previously decided it was worth more or less than. So $200 after markets, they were able to open pretty strong with $150. That is above another 80% on top of the 100% growth that it had on the 24th. So we were starting to draw brand new levels of support and resistance. Now, the question, to answer that question preemptively of exactly how do I think the stock is going to perform, there's one big gap between 60 and 90, because GameStop went and shot through 100% on one day. That is a big free fall for future investors to have to consider. Is GameStop supported at any level between these two numbers? And my hypothesis is we're going to be in trouble if the stock dips too low below 90. One of the behaviors of GameStop is a high amount of volatility around 180 when it was on the 25th, the day after 100% growth. It turns out that we couldn't get the hype up as high as much as we thought it could. It was starting to hover around 120, and that is when it started to rally. So we started to have a slow rally day by day basis, maybe a couple of percentage points up, maybe on one day a couple of percentage points down, mainly sideways trading for GameStop between two levels of resistance, 140 and 120. Now, I'll oftentimes try and dip to a full stop of 100 and change. That's a resistance level that we have seen in the past as well. So this would be a number that it would be hard pressed to dip below 113 on the 3rd, which was just 2 days ago at a high of 131. So that's a $20 difference of volatility that is pretty high compared to the price of GameStop. And yesterday it had a major rally up to $147.87. This was down to also a low of $115. That is a gap of $30. That is $10 more than the day before. So volatility is increasing. When we finally get to today, it had a strong start in the beginning of the day, up to $151, a brand new high as of this week. Because it was performing at $180 last week, this is something that we can start thinking about in terms of the price going in the money. If it closes at above $150, then we are going to see 4.5 million shares. That's twice as much as last week be in the money. Remember when I talked about in terms of options in the beginning, the closer the shares are to being in the money, the more the delta has to hedge, the more these institutions have to buy, and then with delta comes gamma, and gamma increases the amount of the price in a snowball fashion. As we can see, the resistance level that I marked out here is 175. It's roughly 175, 180, and that is the price that it has been rejected by earlier on the on the week of the 24th. So beyond that, there aren't not a lot of marks between 180 and beyond because we have not yet seen reach them. So if you wanted to make a very, very safe call option for the near future for next week, 180 seems right in the money because it was the resistance level that may turn into a future level of support, as we saw with 140. If you looked at the chart from last week, we were already on around 120. It would have been an easy bet to say by this time Friday that we would be up at 140 because that would be the next level of resistance that we were looking at. We were hovering around $100 last week. We finished above $100. That was a very big accomplishment. And now likely the next level to beat is 180. Once again, you should never take financial advice from me, but you should, like these guys, continue to participate in the live chats and send me messages because you might see your message on here to inspire a brand new video. And one of the things that I want to thank as every video starting today is the fact that I have these beautiful supporters that are giving their support, their money where their mouth is. Meatball the Professor tier on this side and Meatball the Space Legend tier on this side. I really appreciate all of those of you who support me on Patreon. If you guys also want to, then go ahead and smash that subscribe button first, it's free, and then that join button if you want to also support me that way too. So I hope you guys realize that it's a big time coming, and whether its squeeze happens today or not, I'm proud of each and every one of you. Have a great day. Continue to being a diamond ape, and as always, for now but not for forever, enjoy.